Trading was a little soft in today's session, with the S&P 500 opening candle seeing a big red candle down. The market dipped below the 6100 level before bouncing back up to 6120. The bounce happened right around our zero gamma exposure level. You can see this has been a support and resistance zone going back for the past week, back here to February 13th. Zooming out on our chart just a little bit, we can see the largest gamma exposure concentration is at the 6200 strike. That's been the case now for the last couple of trading sessions. That is also our upper dealer cluster zone, and the market has been consolidating here just above the 6100 level. This has been a resistance zone going back to the middle of January all the way back here, and so it does look like we are poised to break this, hitting this multiple times, especially over the last couple of trading sessions. Taking a look at the options volume today here, highlighted by our blue bars, most of the volume in the options market was between 6100 and 6150. The 6150 volume was outlier volume. We never traded at that level today. However, the options market was seeing pretty sizable volume here, and we're still seeing quite a bit of skew to the upside in terms of volume and in terms of gamma exposure. So the more we continue to bounce up against this upper 6100 to 6120 zone, on top of the skew that we're seeing in both options volume and gamma exposure, my bet is that more upside is coming. The 6200 level looks like the next obvious target heading into March. If we come over here to our 3D gamma exposure surface model, we can see the 0 DTE GEX at 6120 and 6115 is all expiring today. That's obviously the largest gamma exposure. But zooming in here, we can see that there are a number of large positive gamma exposure concentrations at higher strikes. In particular, the 6165, the 6300 here in the March 21st expiration, and then even coming out here into the June 20th expiration, we're starting to see market participants positioning at this 6600 strike. So positioning is bullish, basically upward and to the right. And of course, we're looking in a three-dimensional space here at the gamma exposure data, but all of this is very positive. Not a lot of negative gamma exposure concentration. All this 0 DTE GEX that we're seeing today at the 6115 strike is going to be rolling off. So this looks like temporary weakness. It may roll over into tomorrow morning, but mostly temporary weakness here, with the remaining data set looking very positive. Next, taking a look at the Qs. The Qs, some weakness as well today, down 0.46%, including after hours action. When I look back to the lows on January 13th, we are still solidly in this uptrend. And even in the past couple of weeks, the uptrend appears to be accelerating. And this makes sense, looking at the gamma exposure data, we can see growing gamma exposure at the 540 and 550 strike. And we've been watching this here for the past week. Continues to grow. We continue to see upward price action, and that's basically what gamma exposure is showing us. It's showing us potential targets as momentum builds, because gamma effects here at these strikes, especially as large gamma exposure continues to grow, the gamma effects at these strikes pulls the price higher. And so while currently we can see the dealer cluster zones and basically the market action in general is centered between this 530 and 540 level, and most of this, of course, is positioning into OPEX, which is tomorrow. But I suspect that once we get through options expiration, the big monthly expiration tomorrow, I think a lot of this is going to clear out. Maybe a little consolidation before the next leg higher. Next, let's take a look at Tesla. Tesla trading above 350, holding its own over the last couple of trading sessions ever since we saw this bounce just above the 325 level. The gamma exposure data highlighted by these purple bars is skewed to the upside, with the largest concentration at the 400 strike. Obviously, we're not going to go straight to that level, so there's going to be some chop as market participants begin to feel a little bit more comfortable after the huge sell-off in Tesla over the last couple of months. Turning to our gamma exposure data graph, one of the other factors contributing to a potentially short-term bullish perspective in Tesla is our GEX weighted volatility gauge. Currently, it has a 29.6 reading. This means 29.6% of the time implied volatility was lower over the past year. And so with implied volatility decreasing, gamma exposure increasing into positive gamma exposure territory. This is kind of setting the scene for the potential buy the dip environment. This basically tells us that the environment in the options market and in the underlying is currently leaning to the upside, at least in the near term. And so I think as long as we can maintain above the 350 level on Tesla, currently the zero gamma exposure level is at 352. But as long as we can remain above around the 350 area and in positive total gamma exposure, I think this is a pretty good setup for Tesla over the next 4 to 6 weeks. Next, let's take a look at Palantir. Palantir trading below the 100 strike today after the big nasty move. I think this was a 10% move in yesterday's trading session. So we continued that this morning before finally bouncing back up above the 105 level, trading 106.16 in after hours. We highlighted the potential for a sell-off with the dealer cluster zone up here at 120. Basically, this is highlighting a level where as the price trades above this level, option dealers are going to be forced to sell more and more shares of the underlying security the more price hangs above this large gamma exposure concentration at the 120. We don't see very much gamma exposure growing at higher strikes. And so there's really not enough call buying coming in the options market to offset a lot of this dealer selling pressure that's taking place. And so that, combined with a number of other factors, of course, facilitated this quick sell-off over 20% in just 2 trading sessions. And so the gamma exposure picture has certainly shifted. However, I'm not seeing much gamma exposure growing below this level, below the 95 level. Not much going on down here. And so it looks to me like market participants, at least in the options market, are not betting for lower prices here in the next couple of weeks. Next, let's take a look at Apple. Apple trading above 245. This is a name that we're actually trading an option strategy in our portfolio, which, by the way, you can follow along in our community Discord. I'll put a link down in the description below. The gamma exposure data is concentrated between 245 and 255. And in fact, that is our target zone over the next couple of weeks. We are consolidating here just above the 245 level, which previously saw a rejection at the end of January. And so I think if we can get a little bit of momentum going, breaking above this 245 level, I think 250 and potentially 255 heading into March are viable targets. Options volume is also strong between 245 and 255. And so this is just another factor that is giving me some confidence that we can continue grinding higher over the coming weeks. Let's take a quick look at gold. GLD trading above 271. This has been an excellent performer over the last couple of months. We've been trading GLD a number of times in our options portfolio, and the gamma exposure data still looks great between 270 and 280 for another leg higher. I'm looking for a pullback somewhere into this 265 zone. We actually got a pullback a few trading sessions ago, and I'd like to see another one perhaps tagging this zero gamma exposure level just below the 265 strike. If we can get that here in the next week or so, I think that'd be a fantastic entry point for a long position for the next leg higher, potentially into the March 21st expiration. I think 275 and 280, somewhere in that zone, is a likely target for GLD. We are seeing continued volume coming in at some of these higher strikes as well. The main reason I want to wait for a pullback, however, is because we are getting into our upper dealer cluster zone. I think it's going to take some time for price to digest the move that we've seen. We really haven't had very many pullbacks, and I'd just rather get in at a little bit of lower price, a little bit cheaper options, playing for the somewhere between the 270 and 280 level while price is trading around 265. That looks to me like a great setup. We try to track potential setups a few steps ahead and anticipate potential moves. The setups don't always give us the perfect entry point. However, when they do, they can have really big rewards. And so I think patience is really key here. If we can get that pullback, this is going to be a great setup. And remember, you can get access to our gamma exposure dashboard and our option flow analytics tools, as well as our algorithmic trading strategies and proprietary technical indicators, which we're actually going to be rolling out here in the next couple of days. Head on over to geeksoffinance.com. You can sign up and become a member. We're currently running a $300 off promotion of our yearly portfolio manager tier subscription. Use code WINTER2025 at checkout. We do have a few spots remaining, so be sure to take advantage of that while you can. Members also get access to our premium channels in our community Discord. We got a ton of great traders in there sharing their own trading strategies and trade setups. We also share our portfolio strategy, and you can see all the moves we're making in our portfolio in real time. Link in the description below. Thanks so much everybody for watching, and we'll see you guys in the next video.